Hello and welcome everyone to episode 20 of the Nord Search podcast. Very happy to be joined today by Alan Smallwood, who is commercial principal at Gore Street Capital. Many of you may already know Gore Street Capital already if you're in the battery optimization space. So it'll be really interesting to get Alan's thoughts today on the market. So Alan, thank you for joining me. Welcome to the podcast.
Thank you for having me, Patrick.
Yeah, it's great to have you. You came recommended, so that's always good. Lots to talk about. It's an exciting market at the moment.
It certainly is. No, the pressure's on then, right?
Yeah, for sure. We always start with just introductions for those who don't know you, bit of an intro to yourself, career background, and then yeah, we can go into what your role is at Gore Street if you're happy to do that.
Yeah, perfect, fantastic. I'll kick off with that then. So yeah, I'm Alan. I've been in the energy industry now for getting on for 20 years, which is slightly scary. So I joined Centrica straight out of uni, did a degree in maths. Always wanted to use that maths somewhere in industry. So I joined Centrica and spent a long time at Centrica. A whole variety of different roles there. It was really interesting time to get into the energy space. It was just after the kind of dash for gas. We had a lot of big CCGTs around the country that basically weren't running because the coal was a lower price, so was undercutting in the merit. So that was interesting, and it was right at the back end of large scale oil generation as well, which
Yeah,
is a million miles away from where we are today, which is super positive for where we've
yeah,
got to in that time. So yeah, I spent a lot of my time at Centrica as a kind of data analyst looking at fundamental modeling of energy markets. So trying
okay,
to forecast electricity prices. So we did it in the short term to help with trading decisions, and in the long term for investment decisions and asset valuations, these kind of things. And you learn a lot by doing this kind of thing because you have to really deeply understand these markets and understand the different levers that go into the pricing effectively. So I had a great time at Centrica, really enjoyed it, and it was coming on for kind of 2020, and I was thinking probably time to have a look elsewhere and do something slightly different. I
yeah,
wanted to get more involved in the area that I think everyone sees as the most important to the energy space at the moment, which is net zero,
yeah,
decarbonization of the globe effectively. And so I wanted to get into the two things I really wanted. So I wanted decarbonization and I wanted a smaller company so I could have a bigger impact. So I kind of looked around to see what there was, and I found a company called an ESCO. So an
yeah,
ESCO or were a developer construction and O&M for solar and storage assets. So they were really early players in the market.
yeah,
So I joined Unesco in 2020, and the role there was to then set up a kind of new part of their business, which was the trading side. So, as I say, they did development, they did construction, they did O&M, and then the idea was we'd add the trading on at the end. So, spent 3 years there, had a really good time. Learned a lot about the battery market and built this trading function that was really successful. Was very happy at Unesco. The thing is, in a role like that at a developer, you get to know a lot of the market. So you talk to a lot of people, a lot of investors. It's a really good place to kind of learn about this kind of community of ours in the battery world, which isn't that big really.
yeah.
And I spent quite a lot of time talking to the Gore Street team. The commercial guys at Gore Street, they clearly really understood what they were doing. And that was great. And I always looked at them and thought that's the place that, I'd like, these are people I'd like to work with. I also kind of look at their strategy, right? So they started in GB and then kind of slowly moved around the world. I think that's a really sensible thing to do. It's a kind of investing 101, really. So when the opportunity came to join Gore Street, it was really quite a simple one for me to kind of join. And I've been here for 8 months now, which has been
Okay,
great.
nice, nice. And for those who don't know Gore Street, could you just give a bit of an overview of who Gore Street are?
Yeah, absolutely. So Gore Street started back in late 2015, 2016, I think it was.
Yeah,
Really kind of at the starting point of the battery surge in GB.
yeah,
And they kind of looked at the market. How can we make the biggest impact on the transition to net zero? How can we make the biggest impact on decarbonization? There are a lot of companies out there doing wind, a lot of companies doing solar. That
yeah,
market was fairly saturated. There weren't many people out there doing batteries. So that's what they
Yeah.
identified as kind of their unique position in the market, and they went for it, right? And they got it right, and that's why it is what it is today. So Gore Street is a company that invests and owns battery storage assets around the world. So they started in GB, as many people do, which was really the first true market for batteries globally.
Yeah.
From GB, they went to Ireland, Germany, Texas, where California's coming very soon, and then Japan later in the year or early next year. So they've really kind of expanded. So at the moment, I think there's 420 megawatts of battery assets around the world.
Yeah.
That'll be 620 fairly soon, and they have a pipeline of 1.25 gigawatts globally, which is fantastic. So, and the idea is we do as much as we can in-house. We
Yeah.
are battery experts, so there's about 50 of us in the team, and we are the experts. So we manage the construction ourselves. We have
Yeah.
a really, really strong asset management team, who
Yeah.
are constantly monitoring the assets and watching them. I head up the commercial side, so we work with existing optimizer partners around the different regions that we work in, and I'm also now building the in-house trading team that we have just kicked off in the market just recently.
Interesting. So I think there's a lot to go into in a bit more detail there. But I think first, for me, because I've been curious about this. Like, I know the UK was like the early market for batteries, but like, why was it early in the UK compared to anywhere else? And what was the
Yeah, well,
reasons?
I think here we have to give National Grid a lot of credit, right? They saw where we had to get to net zero. There's going to be a
Yeah.
lot more renewables coming online, and it's
Yeah.
going to get harder and harder to manage the system. So they saw that batteries were a unique asset class that could offer resilience to the grid. So
Yeah.
you can build batteries all around the country and put them into frequency service. So they're effectively acting as synthetic inertia, keeping the system running. And
Yeah.
so it's to our benefit that National Grid saw this and created the markets to incentivize people to build the batteries. That's really why we became such a hotbed for batteries. It helps,
Mm.
the geography helps, right? So the fact that we're a kind of a small independent island, effectively,
Yeah.
really helps because it means we don't have as much inertia as you say. You look at mainland Europe, they're very well interconnected. It's a very, very large system. They don't need as much inertia,
Yeah.
or synthetic inertia. So I think that really helped, and that's why GB is kind of at the forefront. Other markets are now kind of catching up to us and overtaking indeed. But yeah, I think we have to give a lot of credit to National Grid for that, to be honest.
Yeah. Good. Well, I think it's also good to see that we are innovating, as GB
Absolutely.
in certain areas. There's a lot of negative press in the UK at the moment, but it's good to see that we are, you know, early adopters in these areas, which are so important.
Absolutely.
Yeah.
Yeah, completely
Awesome.
agree.
Well, I'd love to talk about the portfolio at the moment and obviously the UK and the expansion into different markets. But perhaps before we go there, could we just talk
Yep.
about like your role, what you're
Hmm.
responsible for? You alluded to it earlier, but it'd be nice to just go into a bit more detail about that and what
Yeah,
what
yeah,
you're going to be looking at
absolutely.
moving forwards.
Yeah, absolutely. So, I mean, when I joined Gore Street, we had a very, very strong commercial team. So
Yeah,
these are guys who are looking at the commercial activities of the assets that we have over the five different
yeah,
geographies. So this is about selecting the right partners for optimization, long-term and short-term contracts, and then keeping on top of what the strategy is. So looking at how are we using these assets? Are we really getting the most out of them that we can? And are we looking after them at the same time? Because that's really important. So we had a really strong commercial team. So I came in to kind of help oversee that side of it, which is great. That gives you a really good view of what's going on all around the world in the battery space. And then, as I say, the second part then is to build the internal trading desk at
yeah.
Gore Street. So Gore
Okay.
Street has always been quite hands-on in terms of how they look after the assets. So,
Yeah,
I know this because at Anesco, I was on the other side of the table to the Gore Street guys. So they want to know what the strategy is. They want to
yeah,
feed into that strategy and they have ideas and, could we try this? Is this something we could do? So they were always very hands-on and so actually saying, well, let's do this ourselves a little bit
yeah,
is a fairly simple step team. So we
yeah,
have a lot of the capability there. We have a lot of the understanding. So that was quite an easy decision. So we've started that process now. Myself and my team have been building the software in the background to do this for us, because I
Yeah.
think, optimally it's a mix of software and humans. So that's kind of what
Yeah.
we're building. And so yeah, we've spent 6 months building this, and we're up and running in the market right now, just in GB. And yeah, it's been pretty successful so far.
Nice. So it was a logical step, but like how
Yeah.
easy in reality is it to go and start doing that in-house?
So I think it is difficult. It helps obviously that I have the experience. I've done it before from scratch, which is obviously gives you quite a big advantage in getting there. I think in terms of how to do it, if you have a good clear view on what the strategy is and how you want to run these assets, then I
Yeah.
think developing the software to do that, I think is, it's tricky. You need software engineers, you need people who really understand programming, but as long as you can accurately tell them what you want to get from it, or you can actually go in and do the coding yourself, then I think it's entirely plausible to do it. You need the right people, basically.
So you mentioned like you need software engineers. Like
Mhm.
what other types of people would you need? Like I see quite a lot of
Yeah,
like
yeah,
data scientists as well involved in this kind of
absolutely.
process. Yeah.
Yeah, so it's a combination. You need the software engineers, you need the data scientists, you need people who deeply understand the market,
Yeah.
and it's kind of a combination of those three things that you need to do this. And you also
Yeah.
need the commercial understanding, right? So as Gore Street, we can do this because we are the battery experts.
Yeah.
We understand how these assets work. We understand how you should run them and when you should run them. And that gives us a really kind of unique advantage, really, because, we're not just optimizing these assets for today. We're doing them
Yeah.
for the whole lifetime of the asset. So
Yeah.
when I'm making a decision on the trading desk today, for example, I'm talking to the asset management guys and I'm saying, do you agree with our strategy today? Is this the right thing to do? Do you think the battery's in the right place to do this? Is it going to degrade the battery too much? Are all the cells working correctly? All these kind of questions that I can just lean over the table and ask these guys and get a quick answer. And that puts us in a really unique position to be able to do this.
Yeah. So what for you then, when it comes to like optimization and being like the best you possibly can be at
Yeah.
optimization, like what are the ingredients for that? If you've done it,
Yeah.
from scratch before, you're doing it again, like
Yeah.
what are those things that you need in
Well,
your
I
view?
think I think it's a really interesting one, and because I think there's a lot of people out there that look at the industry leaderboards, and those
Yeah.
leaderboards are great, right? They're really high quality. A lot of thought has gone into them, but I'm less interested in that side of it because actually I understand that, as I said a second ago, these assets are not for the next 1 year or 2 years; they're for 25 years. And so
Yeah.
really it's about unlocking as much value as you can, but without hurting the future value, right? At the moment in GB, for example, we're in a bit of a downturn. It's
Yeah.
it's the revenue's not as great as it has been previously.
Yeah.
So, you know, I could potentially run my asset twice as hard today and make 10% more revenue on a baseline, which is already quite small.
Yeah.
That isn't really worth doing, right? So instead of doing that, I'm going to run it a bit less hard today because in the future the value might be better. So it really depends on kind of what you see as the future value and how that comes across. And so again, internally, my clients now are internal, right? So they're our own assets, so that they're internal clients. And I'm dealing with people who are highly educated in batteries and really understand it. And that's
Yeah.
another great advantage to Gore Street is when I'm explaining this to people, they understand it really well. Whereas sometimes with other assets, for example, you may say that and they may say, well, we really want that extra 10%, and it doesn't quite make sense as a strategy. So everything's perfectly aligned because we're doing it internally, which is quite useful.
Yeah, for sure. So having that like internal stakeholders or customers that really understand the asset, and then you're making decisions not just for short-term performance,
Yeah,
that long-term
exactly.
time horizon. Interesting. Like obviously for you, who's gone from being an optimizer and moving now
Yeah.
into on the other side of the table, as you said earlier, into the asset owner world. Like, is there any differences? What are the key things that you've learned there? Shows people
Yeah, it's
interested in that.
interesting. Yeah, it's really interesting. I'm not entirely sure what I expected. I'd say it's less different potentially than I expected. I'm still pushed to do the best performance I possibly can do. My commercial team is judging what I'm doing on the trading side just
Yeah.
as much as they would judge anyone else, right? So I'm still having to live up to the same standards, and that's great, right? Because that keeps me and my team on our toes and keeps us trying to deliver the best that we can deliver. From that side, I think it's, less of a difference than you might expect. And as I say, I think the fact that we're one team doing this means that we're all on the same page and we're trying to deliver to the same message and to the same end goal. So that really helps in terms of analyzing what we did and why we did it and whether it
Yeah.
was the right decision or not. So I'd say that's really the only key difference, to be honest, because at the end of the day, I have to perform, right? If I don't perform, then the assets don't perform and the share price goes down, and that's not what anyone wants, right? So I'm here to perform, and I'm being held to the same standards as I would if they were anyone else's assets.
Yeah. Interesting. And how do you ensure that you are performing? Like you mentioned there, it's such a job where you are required each month to perform at the highest level possible. So how do you ensure that?
Yeah, so I mean, we have a lot of data, and this is another good thing about taking this in-house is we have access to all of the data and it's live data. So I
Yeah.
can constantly look at how are we doing today? How does this compare to what we see other people are doing? And I can get that feedback in real time. And if it's not as good as I would hope it to be, we can make adjustments to the strategy, we can change things. So we have that constant feedback. And as I say, we have a commercial team at Gore Street who are, it's their role to look at this for us. So they're constantly looking at the market and saying, okay, how is optimizer one performing against optimizer two, against optimizer three? And so they can give me a really clear view on, today you're here, yesterday you were here, and for this month, this is how you perform compared to the market. And so, and it is not always, you have to be top, right? Because if we've cycled the asset at 10% of what other people have cycled at, then you can accept a bit less revenue. So there's a bit of an offset there, but obviously I'd rather be top. That's what we strive to be. So yeah, it's really about looking at what the market's doing and how do we feel our performance compares to the market effectively.
Yeah. So is it very like quantitative, the approaches that you make?
Yeah, it is. Yeah, I mean, it is. My background's in maths, so that's what I enjoy doing. So
Yeah.
yeah, the software that we've built has a lot of maths in it. It's
Yeah.
and that's what you got to do these days, right? These are fast-moving markets, and
Yeah.
you need systems that can forecast prices and make decisions in very short time periods in order to
Yeah.
capture that volatility effectively.
Yeah. So is that being done like algorithmically then?
Yeah, a lot of it's algorithmic. So I'm kind of a strong believer in a bit of both, right?
Yeah.
So
Okay.
some
Nice.
decisions are made by traders,
Yeah.
some decisions are made by the software, the algo, and I'd like to think we've kind of got a good balance between the two. There is a lot of human interaction, and there's a lot of different things you can do with the software. So different modes
Yeah.
you can put it in, different settings you can change. And a
Yeah.
lot of that's driven by the trader as well, because they'll see different markets, they'll see different regimes, and decide to
Yeah.
do different things with the assets.
Yeah. I was going to ask like what things are good for the traders to still obviously make decisions on, and
Yeah.
compared to what the algo makes decisions on.
Yeah, so I think there are some things that, I mean, everything is guided by analytics, right? There's
Yeah.
nothing where I've got a trader looking at a MACD chart, because that's just not what I do, right? So
Yeah.
everything is driven by quantitative analysis. So
Yeah.
that's what we're doing, right? So we have models that we run every day that say this is the optimal bidding strategy, this is how you might want to bid into the D-star markets. All these different decisions, we have data feeding into us and saying this is what we think the optimal is, this is the range, this is what it might be, these are
Yeah.
the different options. And then we have a trader who has experience and is looking at it and saying, okay, well, given what the model's presented me with, I think this is the best strategy for today.
Mhm.
And then they can then apply their own logic on top of it. So they can say, well, I know that given the way the wind's turning out today, or whatever it looks like, this is what I'm expecting later. So I can kind of tweak the strategy based on that as well. So there's a bit of both. And then the real-time intraday trading decisions, that's kind of highly driven by the algo, because
Mm.
they need to be really quick decisions. So
Yeah.
everything has oversight of a trader. So a trader will see everything that the algo's done and can then intervene if they need to.
Yeah.
But most of that is driven by the software.
Yeah. Interesting. So in days like we had, I think, first week of November in Germany, where
Mhm.
there was very little wind, is that where it really
Yeah.
helps having a trader on the floor that day, like who can
So
make a decision and
it's
outlook
in
on it?
it's interesting because very little wind is something that is forecastable. And we saw the same in the UK, right? So it was a very low wind day, and that meant high day ahead prices, which fed through into the D-star markets as well. So yeah, but these are things that the model can actually deal with quite well, right? Because wind is obviously one of the major inputs that you have to these models. And so it can see that the wind forecast is low and it can react to that and it can know what to expect as a result of that. So it's actually more relevant is stuff like interconnectors tripping or a nuke tripping or something like that, which is unexpected in the market, which suddenly a trader can see and can kind of jump in and say, well, hold on a second, there's something going on, which
Yeah,
is maybe outside of the normal kind of regime. So yeah, it's more those kind of things that you need someone kind of watching the screen to
yeah.
jump in and prevent.
Okay. And those low wind days, does that just strengthen the case even more for batteries?
Yeah, I mean, I mean, everything strengthens the case for batteries, right? We're going to get a lot of volatility going
Yeah,
forwards, and batteries can deal with that extraordinarily well.
yeah,
The problem to a degree with wind is you can get these periods when you have 6 or 7 days of low wind, and
yeah,
that's a problem for us at the moment because we just don't have the capacity in batteries to store that much energy. So batteries are
yeah,
great when you need an hour or 2 or 3 of energy. They're not so
yeah,
good when you need 6 days of it. So
yeah,
that's the kind of problem that needs to be solved at the system level, and that is
yeah,
probably the biggest challenge in
yeah.
getting to net zero.
Okay. And just curious, because I don't know myself, but how
Mhm.
long can batteries store power for at the
I
moment?
mean, so if you're talking about lithium, which is where we're playing at the moment,
Yeah,
you can do whatever you want, right? You can
right,
build a 12-hour site if you want to right now. Most people haven't
right,
done. In GB 10s nowadays, kind of back in 2016, 17, you started at half-hour batteries. So they'd be full power for half an hour and they'd be empty or full. Then you moved on to kind of an hour, and an hour is fairly standard. And now 2 hours is probably the standard in
right.
GB. It really depends what you need from the battery. Again, this is something that Gore Street have put a lot of time into. In GB, a
Yeah,
lot of our assets are 1 hour because we saw that as the sweet spot for what we needed to deliver the services in the market. In
yeah,
Ireland, we have half-hour batteries because that was sufficient for the DS3 system. So
right.
that worked for us. Texas, we have 2 hours because that enables
Okay.
us to access the ancillary service markets there. So really, we're looking at each market individually and saying,
Yeah,
what do we need for this market? What's the best thing to deliver? And it's interesting because a lot of people a couple of years ago built 2 hour assets in GB because they were
yeah,
saying in the future we're going to be trading. The more duration you have, the better. The problem is they did that at a very, very high price. This is when batteries were really at a premium. And
right.
nowadays you can extend and get that extra hour for a lot less capital. So actually nowadays 2 hours probably makes more sense than it did 2 or 3 years ago. But if you're sat within a 1 hour asset now, you can potentially expand it and make it into a 2 hour asset now at a much lower cost than you would have done 2 years ago. So it's really about trying to time the market and get the right
Yeah,
sized asset for the right time period.
interesting. So it's very market and system dependent.
Very much. Yeah, very much.
Cool. I think it'd be good to talk about the UK market
Mhm.
and where it is today,
Yep.
and perhaps the reasons it is in this position. Because I've heard that, yeah, maybe it's having tougher times right now, perhaps. So it'd be good to just have a bit of an overview on that
Yeah,
if
yeah, no,
people are
I
interested.
think it is interesting. I think a lot of people talking about tougher times. I think what we have to remember is we came off the back of some exceptional revenue years.
Yeah,
The introduction of the DC market in particular, and then DR and DM following,
yeah,
they were exceptional revenue years, and this will happen, right? So this is
yeah,
this is kind of natural of these kind of new energy markets. You're going to get these cycles, right? So you're going to get periods of high prices and periods of low prices. Batteries are really good at delivering ancillary services, so delivering frequency services.
yeah,
Now, there's a certain amount you need to keep the system up and running. And as I said, National Grid have done a great job of having the products to incentivize people to build the batteries. We're in a
yeah,
situation now where we have enough batteries, right? These markets are saturated. We don't really need any more batteries to do these services at the moment. In the future,
yeah,
the requirements will grow.
yeah,
At the same time, the traded markets are not quite volatile enough for batteries to make a lot of money. They can do okay, they can do pretty well, but they're not making exceptional returns. Again, that will happen in the future when we have more and more renewables and less thermal. There's going
Yeah.
to be more intermittency, more volatility. That's good for batteries. So we're in this kind of strange position right now where neither market is particularly good, but both have, I'm confident on both recovering. It's hard to say exactly when. I've spent
Yeah.
a lot of my career trying to predict these things. And
Yeah.
the main thing I've learned is you can't predict them. It could be tomorrow, it could be 6 months, it could
Yeah.
be 2 years.
Yeah.
It's really hard to say, but it will happen. It will recover because these
Yeah.
things work in cycles. And this kind of goes to the strategy that Gore Street had. We decided fairly early on that we can't put all our eggs in one basket. I mean, it's not
Yeah.
even a good decision. It's just not a bad decision, right?
Mm.
So we decided to diversify, same asset class, different geography, right?
Yeah.
So that's why we're now in 5 different markets, and that's great
Yeah.
because all of these markets are basically independent from a
Yeah.
pricing point of view, from a revenue point of view. They'll all have these cycles, right? So they'll all have good years and bad years. The more diversified you are, the more stable your earnings are going to be, which is why, the past year or two of poor revenue in GB hasn't affected us as much as it might have done, because we've actually had Ireland holding us up, and Texas and Germany. This is kind of the strategy, and it's played out really well for us for the last few years. Having said that, we'd obviously like it to recover in GB.
Yeah. I guess like it's like kind of investment 101, isn't it? Just have a diverse, make sure you've got a diverse portfolio. Time in the market when GB does come back, I guess that'll be when some real money's made.
I think so, yeah. I mean, but don't get me wrong. There's money to be made now.
Yeah.
If you know
Yeah.
what you're doing and you have a good strategy, you can make reasonable returns now.
Yeah.
I
Yeah.
think people look back to the exceptional returns of a couple of years ago and say, well, we're not at that level. But you don't have
Yeah.
to be at that level all the time, right? That's going to
Yeah.
happen every now and again, and that's enough,
Yeah.
right?
Yeah.
The returns right now are not terrible.
Yeah. And I guess that's kind of like what I see with a lot of my clients who are prop traders in the power space. It's just like that understanding that we're not going to beat 2022.
Yeah,
Like that just was a bit of a anomaly. And
yeah,
even
absolutely.
2023. So it's like I spoke to one of my clients who are a very successful prop firm in power, and they were like, yeah, we're kind of this year probably going to go back to 21 levels.
Hmm.
And
Yeah,
that's kind of where we were before 20, kind of
exactly.
should be before the anomaly years. So yeah, it's just remembering that really.
Yeah, yeah. And
Um,
I'm really optimistic. If you look fundamentally at what's required, you
yeah,
have to have batteries. If we're going to get to net zero, and we have to get to net zero, you have to have
yeah,
batteries. You have to have a lot of batteries. And you're not going to get
yeah,
batteries unless the revenues are there. So the
yes,
revenues have to be there, right? So fundamentally speaking, that they will be rewarded for being on the system. And so long term, I'm really optimistic about batteries
yeah.
in GB and beyond, to be honest, globally.
Would be good to now talk about like what you obviously made that decision to diversify, to enter
Yeah.
new markets. It'd be good to understand like when you make investment decisions, what's the criteria to enter a new market? Why did you enter the markets that you have? So
Hmm.
Germany,
Yeah.
US,
Yeah. Yeah.
obviously
Yeah.
Japan and that being the next one. Good to understand that.
Absolutely, yeah. I mean, so part of it is just about opportunity, right? You have the
Yeah,
opportunity to do it, and you have a deal that can be made, and you can make it. Obviously, we have a lot of investment analysts who are looking at markets and saying, well, this looks like a good market for these kind of fundamental reasons. And you look
yeah,
at third-party curves and how does that look? So you do all this analysis. And one of the key things we're looking at is how does the revenue correlate to what we already have in the portfolio? Because we
yeah,
would like it to be uncorrelated if possible, because that's what helps our diversification. So that's kind of another one as well. And then, you'd look at it and you put your assets out there, and you then say, well, am I in the right shape? Have I got the right assets in the right positions? And if not, how can I look at refactoring this and changing that shape around a little bit to give me the right diversification profile? And then you've got to also understand and accept that there will be bad years for some markets, right?
yeah,
GGB is an example right now. We're in a low period, and that's okay, right? This is going to happen.
yeah,
You got to have the low periods to get the high periods. So you've just got to accept that. And we can sit back and say, well, yeah, GB is not great right now, but Ireland's still delivering for us. And, Texas might be good for us next year. And, California, it's kind of a combination approach, which is really important. And that's why
mhm,
the strategy is, as I say, it's not even smart. It's basics, right? It's that's how you
yeah.
invest. Don't put all your eggs in one basket.
Yeah, of course. Like just on Germany,
Mhm.
because I've got a lot of clients in Germany and a lot of clients that want to be in Germany, and it seems like it's the hottest
Yeah.
asset in town, batteries. I'm even getting asked, can you introduce me to asset owners? Why is Germany so hot right now? Why is there so much interest in it?
Yeah, I mean, so Germany is hot right now, and the revenues are really good in Germany at the moment.
Right.
This year's been really good for us in Germany. The thing is about Europe is it's a really, really big market, and so
Yeah.
if they decide to do batteries, they're going to do it in a big way, and you're
Yeah.
going to get the revenue because it's really deep, very liquid wholesale market. And so from that point of view, it's probably better than GB for trading. It moves quicker and it's more liquid, so you can take
Yeah.
positions more easily. So that's
Yeah.
been really good for us. But also, these things change around. This year it's Germany. Last year, a lot of people were talking about Italy.
Yeah.
It really depends kind of where the flavor of the month is. And again, we kind of want to step back from that a little bit and say we don't want to just chase the hot topic of today. We want to kind of spread our stuff out and take that diversification really. So
Yeah.
yeah, that's where we're at.
And why does it change? So, like, why has the revenue been really good in Germany this year, for example?
It's a whole variety of different reasons, to be honest, and
Yeah.
it's based on a position of what's already there and what's coming off the
Yeah.
system, and
Yeah.
what's their energy look like. How much gas have they got in storage? How are they looking for this winter? It's all
Yeah.
these kind of fundamental questions that go into it, and then you look at what batteries can do, right? Batteries are an incredible asset class. They're so different to a lot of what's already there. They're fully dispatchable. They can do
Yeah.
import, they can do export, and they can respond really quickly. A lot of people looked at the dynamic products when they came out in GB. This is a product where you have to read the frequency and respond to the frequency 20 times a second. I mean, this is an
Mm.
incredible asset class that can do that and
Yeah.
do it successfully. So batteries are just incredibly good at solving these problems. So any volatility on the system or any issues with frequency, batteries are a great solution. And if you have those issues, batteries are going to get really well rewarded, and that's what's happening in Germany at the moment.
Is it also because like there's not as many batteries? It's not as
Well,
saturated as the UK.
definitely,
Like, is that also a
I mean,
factor?
everyone is behind the UK in terms of their saturation levels, and they will all saturate in time. They
Yeah.
will all saturate, and I've said this for a long time, and probably was over optimistic in the early days on my view, but we will move to a situation where trading is the dominant market for batteries. When we have
Right.
enough intermittency, when we have enough renewables online, when the nukes and the thermal generation starts to come off, batteries and trading are going to go hand in hand because you need them
Mm.
to shift around the renewable generation. Again, that's when we're going to see the kind of a real boom in battery volumes because you need a lot
Right.
because these markets are really deep, much, much deeper than ancillary service markets. So
Yeah.
that's going to be really interesting as well. So I think there are some really good times coming for batteries when we get to that point. We're not quite there yet, but I think
Yeah.
that's going to be exceptional returns again.
When do you envisage we'll be at that point?
It's going to be market by market, so
Yeah.
it's going to be different for every market. And as I say, I having spent a career forecasting these things, I don't
Yeah.
like to give you a specific date, but
Yeah.
it's not too far off, right? It depends on climate change as well, right? We're seeing, warmer summers, colder winters. It really depends how it all evolves and what kind of scenarios we get over the next few years. But it could be this winter, it could be next summer, it could be 5 years away.
Yeah.
It really depends how we evolve. The other problem we've got obviously is we're electrifying everything, right? So cars
Yeah.
are electrifying, heat's electrifying.
Yeah.
Hydrogen was kind of a solution that was mooted a year or two back. People are talking about hydrogen a lot less now, I think, which is probably sensible. So we're going to get a lot more electrification, and that comes with real problems for system operators, that their grids aren't set
Yeah.
up for twice as much demand.
Yeah.
So again, you need more batteries to solve those problems. You need reinforcement of the grid, and you need a lot more generation, right? And this is why net zero is such a difficult problem to solve, and but it's such an important problem. We can't afford not to solve it.
Yeah. Just on hydro, just quickly, why is that are we seeing that perhaps less than a couple of years ago?
Yeah, I mean, it's interesting. A lot of people looked into it and saw it as a good solution. I think it's just complex. I don't think anyone's ever been able to really prove that they could do it at a commercially viable level.
Right.
You're talking about different methods of creating hydrogen. Electrolysis is
Yeah.
very, very expensive. Steam methane reformation, that is that creates carbon, and you have to capture the carbon. Well, carbon capture storage isn't really a technology that's really worked ever. So I
Right.
think there are just a lot of issues, a lot of barriers to getting there with
Yeah.
hydrogen.
Compared to
There
batteries.
will be specific use cases, right?
Yeah.
If you've got a need for generation, big thermal generation on site, or hydrogen burning, that might work, but I can't see it as a solution really.
Yeah.
In
Interesting.
general.
Just going back to the market. So you obviously you're
Hmm.
entered US and you're entering Japan. So like,
Yeah.
what are the reasons why? Like, what's the criteria? Why did you think, okay, we need to get into these markets?
So, as I say, it's about opportunity. So we have the
Yeah.
opportunity to do that.
Yeah.
And then about looking at the market and saying, well, is this market suited for batteries? Can we do this and does it make sense?
Yes.
We've heard a lot about, there's a lot of solar over in the US.
Yeah.
And obviously with solar's great for batteries. Solar's the
Yeah.
perfect tech for batteries because it's
Yeah.
really predictable. It comes in one lump in the day and you can store that and then you can let it go later. So they go hand in hand really well. So it's about looking at that and saying, fundamentally, does it make sense? If it
Yeah.
does, is there an opportunity for us to do it? If there
Mm.
is, then let's do it and add it to our diversified portfolio. And we're in this great position where it's not our first asset class. So if we do it and it
Yeah.
underperforms, we've got the rest of the assets holding us up.
Yeah.
So it's not as big a gamble for us.
So is it mainly like Texas that you look at? Is there
So
other
Texas and California. So we've got
California
a.
where the sun shines?
Yeah, exactly right.
Yeah.
Also, because if you want to trip out there, you might as well go to the nice
Yeah,
places.
for sure.
But yeah, no. So I mean, it's kind of indicative of how we've grown as a company and how the market's grown, right? So we started
Yeah.
in 2016 with a little site in GB,
Yeah.
6 megawatts it was, which was at the time I think the biggest privately owned battery in Europe. 6 megawatts, and here we are, less than 10 years later. And in California, we're just about to energize a 200 megawatt, 400 megawatt hour asset. And it's like
Wow.
the comparison is night and day. It's
Yeah.
incredible how quickly this market's moving.
Yeah, for sure. And then Japan. I hear a
Mm,
lot about Japan. A
yeah,
lot of my clients are setting up in Japan. A lot of
yeah.
people are excited about it. Like, what's the reason why you're obviously going into Japan
Yeah, yeah. Mostly
in
just because I want
25?
to.
Is that when you start the?
Yeah, 25.
Yeah,
Yep, yep.
yeah,
Mostly because I want a trip out there, to be honest.
yeah. It's a great place,
No,
I've
I mean
heard.
it is. Yeah. Again, you see the market and there's an opportunity
Yeah,
there, right? So they're making
yeah,
there's a lot of reforms coming and they're opening it out. It's really there's just a great opportunity and they need the battery assets, right? We see that need for it. They've been in a
yeah,
bit of crisis as their nukes have come offline. Obviously, the disaster of 10 years ago, whenever it was, they've been in kind of this trying to figure out how to change their energy system. And
yeah,
now, with the cost declines and the ability that batteries have, it's just a great tech again for them to move into the future with. And so
yeah,
yeah, so we're going in kind of first mover again, which is
yeah.
great. Hopefully
Nice.
have our first sites up and running early 25, which is yeah, super
Yeah,
exciting.
yeah. So I was gonna say, are you like early? So you're catching it
Yeah.
very
Yeah,
early
so
right now.
and that's
Yeah,
what we're aiming to be, right? We're
yeah,
pretty much first mover in GB, first
yeah,
mover in Ireland, pretty fast followers over in Texas and California. And
yeah,
yeah, we'll be first in Japan as well, which is yeah, it's exactly where we want to be as a company, right? And
yeah,
it's also good for the system, right? Because they've got us coming
yeah,
in. We understand these assets. We know the issues that they have. We know how
yeah,
to they're complex assets, right? So you
yeah,
really want someone who understands them to be building the first set in your country. So yeah, it kind of works for both parties, I think.
yeah. Have you seen like a lot different to get deals done in different countries? Like, is there?
There are definitely differences, but yeah, it's all about the grid really, because the tech's the same,
Yeah,
right?
yeah,
We have a very deep relationship with the supply chain. Obviously, we've built a lot
yeah,
of these things. The tech is the same. the markets they're broadly similar, to be honest. I mean, there's a lot of talk about how they're different, but actually,
Yeah.
you're doing frequency or you're doing wholesale. There's different
Yeah.
flavors of that, different ways of doing it. Some are centrally dispatched, some is self-dispatch. They're very different from that sense, but at the end of the day, they're doing similar things for the system. So that's quite easy to get into. So yeah, I think there's a level of learning you have to apply, but
Yeah.
once you've done 5 markets, doing the 6th one is a lot easier than doing the first one,
Yeah.
right? So
Okay.
we have
Cool.
that advantage.
Yeah. And are you already looking at the seventh? Like, have you got
Seventh,
plans? Have you
eighth,
doing
ninth, 10th,
research?
yeah,
Yeah.
absolutely. Yeah, no, constantly looking, right? So
Yeah.
we are this problem, climate change, is
Yeah.
global without a doubt,
Yeah.
right? So the solution has to be global, and that goes with our diversification strategy. So yeah,
Yeah.
we're always looking at the different markets
Yeah.
and how we might look at the portfolio.
Yeah. Is there any markets in particular you're looking at more seriously at the moment?
I don't want to upset my investment guys, so I
Yeah,
can't say too much,
I was gonna say
but
that's probably
yeah, I mean,
confidential at this
there
point
are there
until
are
it's
there are a
not.
lot of markets out there that are exciting.
Right. Yeah. Good. Interesting. Can we talk about like something that I've heard a bit about, and I'm not 100% sure what it is, but tolling
Mhm.
agreements.
Mhm.
Yeah. So can we talk about that and versus like the other way to do things?
Yeah, absolutely. Yeah. So this is something that has come fairly recently.
Yeah.
Again, GB's been a bit of kind of trendsetter in doing these kind
Yeah.
of deals. I mean, before we talk about tolls, right, the first thing that started was floor price agreement. So,
Yeah.
having a floor on your contract. So you as an asset owner, you work with an optimizer, and the optimizer says, I will guarantee you this revenue. I don't make you this
Yeah.
revenue, I will pay you the difference effectively. So that's a floor agreement. The floors that we've seen in the UK so far have been fairly low, so not that exciting. Then we move to a tolling agreement. So a tolling agreement is effectively an optimizer coming and saying, we will take your asset and we will run it however we would like to run it, and we will pay you a fixed amount, and we'll have it for a certain period of time. That might be a year, 2 years, 5 years, whatever it is.
Hmm.
And so effectively what you're doing is you're giving up your market risk. So you're giving up your exposure to the market, and you're saying, I will take a fixed price for my asset, and I'll hand over the keys, and someone else will look after it for 2 years, and then I'll get it back. And I know what
Yeah.
revenue I'm going to make.
Yeah.
Now, that is a way to go if you want to. It's not a way so as the commercial leader at Gore Street, it's not what I would want to do with my assets, because at the end of the day, I'm in batteries because I want exposure to the revenues, right? We want exposure to these markets, right? We don't want people investing into our technology to get a fixed price, basically, because it
Yeah.
just doesn't necessarily make sense. So yeah, I want to take all the upside as well as the downside. The thing with these
Yeah.
agreements, right, and it's the same with the PPA to a degree, is you sign up to this agreement because the trader thinks they can make more money than the tolling fee, right? Because
Yeah.
otherwise,
Of
why would they do it? So that's
course.
where they are. One of you is going to lose out on that deal, right? So you run the numbers. If someone came to me with a crazy number and said, we'll do your toll and we'll give you X amount, and it's way beyond where we think the asset can achieve, then yeah, it's a no-brainer. It makes sense you do it. But if
Yeah.
it's not, then you're losing all of your upside to protect, from what we've seen in the market, a little bit of downside, because these tolling agreements haven't been at the level that has interested us to date, to be honest. So yeah, it's something we're seeing more of, and I think we will see more of it going forwards. It's a way to protect your revenue stream going forwards, and if you're debt financing, that's quite a good thing to do, right? It's a way to ensure you can get your asset built. But yeah, at Gore Street, with the assets that we have, in the situation that we're in, it's not something we'd be looking to do.
So that's because like of how commercially savvy you guys are, and obviously wanting to get the best return for your investors.
Yeah,
Would that?
absolutely. So just wanting to get the best return for sure. I mean, commercially savvy, I
Yeah.
mean, I think it comes down to what your view on the market is. So if
Yeah.
your view is pessimistic, then yeah, you might agree to one of these tolling agreements at a low number. If your view is
Yeah.
optimistic, then you probably wouldn't. So it depends on what your
Right.
view on the market is.
Yeah.
But again, and I keep coming back to this point, we've diversified, right? So we're protected on the downside already.
Yeah.
And so we don't need the downside protection that a tolling agreement gives us, because we see it as fairly limited. And we'd
Yeah.
rather take the upside in the event that something suddenly changes and we get exceptional revenues again. I'd rather take that. I think the upside is much greater than the downside is.
Interesting. Well, I think it's also probably a way for these prop trading firms to get at battery assets because it's, probably
Absolutely.
they don't have to allocate the capital. It's hard to get these assets. Everyone wants them. if they get a tolling agreement, then they get access. And then
Yeah,
obviously
absolutely.
if they do well on that side of the deal, it can work really well for them. So I get why they're probably looking at it more so than somewhere like Gore Street.
Yeah, I think that's right.
Awesome. Well, look, Alan, I think we've covered an awful lot there, and it was extremely interesting. And I'm sure the listeners would agree. Great to hear, obviously, Gore Street as being one of the leaders in this space, getting your insights and your thoughts in a very exciting market at the moment. So, yeah, really appreciate your time, Alan.
Yeah, no worries. It was good fun. We'll do it again.
Absolutely. Thank you.